There's got to be something to talk about.
This is the most important 7 weeks of the year coming up for planning on what you're doing with your crop. This is the window from basically today into June 18th, 19th. You're going to find highs a lot more often than you're not, and we're going to talk about that today.
Let's go.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it's rainy, but it seems like I saw some planters rolling when I was out driving around over the weekend.
They're rolling everywhere. It's going to be hotly debated whether this is running ahead of schedule or running behind. When I talk to guys on the phone, here's what I'm hearing. One guy will say it's running behind. Other guy will say it's ahead. And he's talking nationally, like the news they read. So if you surf enough, you're going to find whatever you want to see, where it is. What does it look like? It looks like this is about as ideal as it could possibly be. You got an early start, but then other guys are going to say, well, the frost probably got it. It's probably not emerged. So it's when it's in this good mood, they're inventing problems. But if you looked at it just from a neutral perspective, I would say, as a matter of fact, pull up the latest ones that are going to come out here right now. We're running ahead now. The argument will be corn will start falling behind. And of course, that's what they're worried about. In a regular year, they would not be worried about this pattern. But in a year where the funds are very interested in being long because of the inflation trade, that it's going to be extra flinchy, if that makes sense. Is there really anything there? No, but it's, again, people will start to argue about the weather nonstop. And you're going to see, guys will see, it seems to get worse every year. They'll see the same weather and say two different things. Almost not too much unlike politics nowadays.
I was just going to say, isn't that just our world in general?
It is, and that really is. And I get on this tangent every once in a while, and time to get on this soapbox. Is that guys are with their smartphones, they're getting more information to themselves, directly to them in real time more than ever. And it's really affected people in a negative way, not in a positive way. Of course, the vendors that are selling it will tell you that it's better information. It's not analysis paralysis. It's just basically people are starting to subscribe to only what they want to hear is what's happening. You're not getting a diverse opinion. They're not talking to near as many people as they would have in the past, and they're leaning more on their smartphone. Now, unfortunately, there's most of what you see for free is going to be the JV team because you usually have a high turnover and you're looking for more clients. So you're not
continue to remind you that our podcast is free.
This podcast is a podcast. It's not meant for trading advice.
That's fine. I'm fine being the JV team. I just wanted to clarify.
Yeah, I mean we're doing it more out of we want to spread we're lucky enough to sit behind a desk and see what everybody does and what more successful guys do hedging wise, and I've seen that over many, many years. And really what we're trying to get to the audience is through little bits and pieces, what does work very successfully in these markets. And of course, we're not going to bring up specific clients' accounts and what they did. Everyone's a little different journey and they have a different way to approach the market. I would say pretty much every account's different that way. And there's definitely some that really struggle with the hedging side of stuff, and then others that seem to thrive, and they all have certain things in common. And over time, that's what we try to do with the show. That's really what this is all about. It's not to give investment advice and hot markets and all that, or recaps that you've already heard 10 times.
I thought it was to talk about fishing and the hockey playoffs.
Well, there's going to be some of that. There's going to be, and whether you want to hear it or not, there's going to be some small talk. We haven't done a good Disney on the road adventure story in a while. We'll do one of those eventually.
Yeah, maybe when your wife's not in the office.
Yeah, probably a better idea. Well, she was part of it, so I mean, we'll go with those stories.
Sounds good.
Not the pre. But I know I was younger then too, so it was like, oof. I mean, yeah, I don't remember half of it, but I was trading the whole time, and that's where it ties in. If the stage manager wanted to know where I was, he'd go looking for a payphone. I'm not even dating myself. It's like there wasn't cell phones, it wasn't even that long ago. Like it was 2001, 2002 when it started to be like you might carry one. It wasn't, I guess it is a while ago. Yeah, now it is.
We're getting old, John.
It is. We are getting old. But so back to people are surfing and seeing whatever they want. And then if you look hard enough, you're gonna think this is the most delayed, worst crop ever. But really, I mean, it's going in perfect. A lot of times it's worse. There's gonna be some delays coming up. Delays, I say in quotation marks. Did you pull up the latest?
It hasn't come out yet.
Oh, okay, so we got a few minutes, but we'll
so let's go. What do you love? What do you love right now?
Okay, so this is actually, and that's what we want to get to. This is one of the most important times of year. This is where the rubber meets the road. Early spring into late spring, you'll find highs often there. And then if that wasn't hard enough, some years it comes in, a lot of years it comes in June, but that might be a secondary high, meaning it might not hit as high as a spring high hit. Some years it takes out that spring high. Some years you don't even have a spring high like last year. It's a little mix of bag, but here's what we got going this year, and that's all that matters. The markets are in a wonderful mood. What I don't like about it is they're heavily, heavily long at a time of year when you normally don't have bullish news. And I don't know what that bullish news would be. It could be delays, but it's really going in fine. So it's like we're not to that hot and dry weather yet. So it's like, are these guys going to hold this gigantic long position this entire time? But it tends to be a very important time for planning. Like you don't have to have an account here to be successful at all. Like this is when the good prices come and then they're gone like that. In between now and June 19th, June 18th, right around there, you'll find the highs a lot. And you can look at the data to back that up. You'll see that. So this tends to be an intensely important time of year where guys get lulled to sleep a little bit on the good plantings and no news. It goes from dry and good plantings to, it's too dry and now this is bullish. Like it switches like a switch.
Are we going to get heat dome talk?
The heat, without a doubt, that's coming. It comes every single year without fail. Now, there's not a big worry. I'm not hearing widespread too dry there. The West is the dry area. Like you go look at the drought monitor, it's like an ice cream scoop right where they grow corn, wheat, and soybeans.
I am starting to see wheat pictures, Kansas wheat.
Yeah.
Definitely a trouble area.
Yeah, that's definitely a crop that's being affected. And the West is very, very dry. Without a doubt, it'll come into play eventually. But where we stand is they're extremely long. And it feels vulnerable up here. Like it feels like a lot of effort to keep it up.
You're talking all grains?
All grains. Even wheat feels heavy.
I thought you were leaning bullish corn, John.
I am. Short term, I don't feel like they're going to pay up for the cash, although they have been lately. And then longer term, with any bump in problem with any production, and then you have a completely different set of numbers. But that window also, like there's also the possibility that it'll go in very good and start growing very good, which is what's happened the last 2 years, which makes this exceedingly difficult. So they're very long. Just know it's very vulnerable. So what do you do with a market like this? You drag a stop behind it, meaning I'm looking at puts more. I'd rather not cap the upside right now. So if I have to defend the downside and I feel like there's trouble here, like in beans, then I'm looking more on the put side of stuff, than I would be committing to that price because the attitude of the market is wonderful. Like they want to buy this stuff.
I'll give you another reason.
Well, what's that?
Closing vol today, July at 16%.
Very affordable.
Beans. Corn, 21.5% volatility.
Very, very, very affordable. Corn. And that's why you can even make a case for strangles and straddles. Both directions. Like it feels like it's going to make a powerful move one direction or the other, and it's certainly set up that way. And the problem is no one knows what direction that's going to be because there's heavy flow into these commodities. Makes it very difficult for planning for prices, planning for inputs, knowing what to do in the markets. Like it's a very tough mishmash. But start planning. Like if your plan is, I am going to see what the weather's going to do, be ready. If you're a premium seller, be ready to sell premium on big spikes. In windows that make sense, if that's what you do. If you think like this is it, and we're topping out, but I don't know what I'm going to have for production. I have to put a bean stop or like a put in there. And I just want to, I don't think beans are bullish, but I don't want to lose this price either. Look at puts, plan, talk to your guy, and planning in between now and mid-June, you're most likely going to find the high for this market. I mean, that's the truth. So what I'm saying is the guys that do plan and have something on paper or orders in will do a lot better than the guys that don't. The guys that have low price in the fall, and then the guys that plan for the spring going into midsummer. So plan, and then when you're done planning, plan some more, because you're going to get busy. It's going to get missed, and then all of a sudden the markets are going to change. But what we have is markets in a very good mood. They want to go higher, but I feel like there better be something actually bullish coming out here, or we're going to start winding down pretty soon. So
live on the Monday podcast, John, the crop progress highlights just came.
And what did corn come out at?
Let's see, where are we at? Actual 25. 5-year average 19, 25%. 5-year average 19%. Last year 22%.
Okay, so plant. And that's what I was talking about. And then the beans are probably even better.
Oh my gosh, yeah. 23% on beans. We got a 5-year average of 12%, and last year was 17.
Yeah, and last week I think was 9. So you're seeing big jump up.
Last week was 12.
Was 12? Okay, yeah. So you're seeing big jump ups, and that's what I'm talking about. It's like this perfect blend of getting rain maybe after they planted, or nothing's being slowed down. You cannot make a case for delayed anything at all. These are big jumps. Not surprising with the equipment we have. It's going to be hard to really get like a severe delay going. Now, I probably just jinxed it for a lot of guys. Sorry about that.
Yeah. Blame John.
Yeah, it's just like when I was fishing, I'm like, looks like the worst is behind us, and then it starts raining immediately, pretty much every time.
Yeah.
Or
I've been on the boat when you've done that.
Yeah, or this classic I throw out. It looks like the forecast is wrong. It's not going to rain at all today, and then it starts raining. Of course, like I don't know why I do it. I just accidentally do it a lot.
Bring your sunscreen means bring your puffer jacket.
Yeah, it's gonna be hot out there. You never know. Changes quickly out there. But so it's really going to be really hard to make this case. So back to what's really important this time of year. Again, you're gonna get some of your best premium selling opportunities this time of year. Now, definitely not today. We're just talking about how bad a deal it was.
Yeah.
And this is where the guys that do well and are in the cafe, maybe even bragging about $6 corn that no one else is getting, this is the time periods that they get it in. Like if you get it, it's almost always these time periods. And then everybody else misses, and they can't believe they're getting $3.50 cash for their corn and all that good stuff, and the whole cycle repeats.
Because you guys know who you are, that when you see 6, you know 10 is coming.
Yeah, inevitable.
That's why
I'm gonna wait.
Get it.
Or I start pulling orders because something I read on Twitter. It's like, oh, this is way more bullish than I thought. I got to get that order at the elevator out of there. I don't want that thing hit. That's too close. Yeah, worst ideas ever. Like it repeatedly. This year is unique, though. I mean, you definitely have a lot of news, and you have a lot of buying in grains. The problem you have is you don't have anything fundamental in the least except for Kansas wheat, which is a real market.
Corn exports.
Corn exports, but still with that large carryover, it's still, do we need to be about 490 with the numbers we know right now? No, we don't need to be, but it's the kind of market that could walk up to 520 if it wanted to, just because, there's money flowing into commodities. So it's also important to recognize what kind of market that you're in. You're in a market that honestly probably some of the best attitude towards grain that I've seen in a while. And other guys will say it was overdue. The inputs are this and that and all that. It isn't that. The money flow is the money flow. And right now they really like cattle. They've shown a lot of interest in wheat and a lot of interest in beans, obviously. Corn, they have a very substantial position there as well. They've loved it. It just hasn't moved corn up a lot. So where are the opportunities? I still say lay in the weeds, be patient. These unless you're trading the range, which has been working, this is very difficult. Like we woke up this morning and they decided they're going to put a large amount of money into cattle and grains today. And it's really that simple. Why did they do that? Is there some magical signal?
Up the bat phone.
Yeah, no, they just simply, it's giant money flow into commodities on what I would call an inflation trade. We just saw this in gold and silver. We also just saw that pop in gold and silver. And without a doubt, it's going to pop in these commodities too. Others argue that the fundamentals in cattle are real, and they are, but still all commodity markets pop and go down. Every one of them.
June cattle at 250 though.
Yeah. Well, yeah, that seems really sustainable. It's in cattle would trade $1 to $2 lower, and then again, perfect example of like that. We don't care about that. Let's carry a premium to cash and buy cattle today. They don't know any more than anybody else, other than they just want to carry a premium over cash, which is really rare in cattle.
Or 30 cross 60.
Don't get frustrated with money. 30. Yeah. It's
whatever you want to pay.
Don't get frustrated if it feels like you're out of rhythm with the market. Everybody is. This is not a common thing in commodities at all. It wasn't common in gold and silver when it happened. And gold and silver popped from the highs, but they're still very elevated over where they were previously. But they're nowhere. We're at $120 in silver. Now we're 77. That we're nowhere near where we just were. You know what I mean? And it's very likely the funds will grow tired of their grain longs if there isn't news soon. Meaning, like if the China meeting, which I don't know how Trump goes to the meeting in 2.5 weeks. Maybe they will. I don't know that. I don't know how Xi bear hug. He's so happy with him. He's gonna bear hug him, is what I'm told in the tweets. That it doesn't seem like they're in the mood to buy any more than what they're already committed to.
I want to see the picture of that.
Yeah, yeah, an actual.
Like to see and yeah, I don't know how big she is, but I'm gonna guess not the size of Trump.
Yeah, it doesn't seem like China is going to be in the mood to buy a whole bunch of U.S. beans, but you never know. I don't see how he goes over there, and we're going to know here. But I would think like if we were to see an announcement where it's delayed again, I would say the soybeans are going to take that very hard. I would think that you remember when it went down 70 that day.
Yep.
It was very similar. That's exactly what set that whole, that train in motion. What's highly unusual is it dropped that limit and then really has gone sideways since then. I don't know that I've ever seen a market like that. That's a weird, very weird thing for it to do.
It was not what I expected, and it's been since that day. Really, I mean, it's a large range, 35 or 40 cents.
It's not,
but it has been sideways since.
What it does look like to me is the funds did not let it go on that 70-cent drop, and they held their position, and now they're defending it. That's what it looks like to me, and that's why it's probably such a weird pattern on the chart. Is that normally when a market breaks, it'll keep on breaking, even if there's like a little fight back, and get some of that 70 cents back, and then it'll roll over. This one went directly sideways after one of the largest moves in many years, which tells me it didn't get underpriced, and they just didn't let it go, and now they're holding on to it and adding to it is what it looks like, but it's not fundamentally bullish enough to go anywhere up, and that's kind of the stalemate I think that we're at. Those markets eventually break. If there's nothing fundamental there, you're going to break. This market's going to break.
Or it's building a platform to launch off of.
Yeah, that's what I'm reading on certain groups is that you get fuel the rocket, they say this time of year. That's a very common. Get the rocket fueled up. But just know these are better markets than you would expect with these fundamentals. I mean, very, very good. One spread that jumps out at me today quickly was the Kansas versus Minneapolis wheat. One guy was very interested because they're near the same price. Is that common? Actually, Kansas over Minneapolis wheat is a lot more common than you think it would be.
I have
a lot more.
I remember seeing that.
Yeah, no, it's a lower quality wheat, and Minneapolis is a higher protein, higher quality wheat. So that's why it's unusual to see it priced that way. But if you go back to just a few years ago, I think it got 35, 40 cents over this time of year. So never say never, but that is a spread that we'll be watching, looking for the attitude to shift from it's burning up in Kansas to we're harvesting it in Kansas. And then all of a sudden Minneapolis gets some weather problems. So that's a spread that's on my radar screen. The corn versus wheat spreads also, I like that, but I really don't like it when wheat's the short leg. It's always scary. And it's a lot more dangerous when you start looking at that stuff. But you got to think that corn's underpriced relative to wheat right now. There's no doubt that it is. It can stay that way for a while, but that'll come back in line as well. What else jumps out at me? The beans being overpriced, but that we've talked about forever. Meal was the leader today. And maybe there's something there, maybe there's not. But I still don't like how they're not even bull spreading this thing. On the way up, they're bear spreading it, and it's just not a fundamentally strong market. Corn, I like the story there, but I don't like how much cash corn's left over. So you got a lot of cross currents here, and you're hitting a lot of double tack from us. Like we're in it like everybody else, watching it day by day. It's kind of a frustrating market, but at the same time, we're at higher prices than we could be. So you can't be too upset, but we're getting right into that window where we started this whole podcast. This is one of the most important times of year to plan. In between now and June 19th, 20th, somewhere in there, you'll find your highs a good amount of times. We'll try to get that chart together so you can see how many. If you put May and June highs together, that's going to dominate where the grain highs come in. So just know this is the time of year where the planning is the most important. And what are our plans? Call us. We'll tell you exactly what we're looking at and what we're going over, and specific recommendations. We'll dive in that with you and walk you through some of that stuff. We'll tell you exactly what we think. I am erring on the side of caution, and I would like to keep the upside open for the next 7 weeks. So that's the way my strategies lead. There hasn't been enough meat on the bone, but watch those corn puts. If it goes up just a little bit more, hopefully we can put something together with not spending too much premium, covering the downside, but letting the upside run through the June 30th report. I want to see that corn number on June 30th. I think we could be 1 million less acres, and I think that'd be a big boost to corn. I think beans are going to be very worried about that bean number going into June 30th. And I think that also is going to be an opportunity. So that's the way I'm leaning. I feels supportive corn going into that June report. And it feels like beans might be a little bit worried about that number coming out there. And of course, they'll toss that number out. Who knows what it's going to be, but that's just how I think it'll trade going into that. And from there, what else are you feeling this week? Anything jumping out at you? Energy, anything?
I got zero for you. I mean, markets have been.
It's exhausting just trying to keep up with
We got 30 some days of beans in that range. We got corn's been going nowhere.
We have no idea what's going on in Iran and when that's going to end. And that doesn't make it easy either.
There's just not much. I was going to ask you what do you hate, but I think we just hate the market.
Yeah.
Crude was up 2 today, so.
I hate when we went fishing the other day. We actually went out. We're on the South Dakota border. We went fishing, and it was the day before. It was every cast. I hyped it up to Ryan, and I said, and then Ryan said to me, "I'm a little worried. This going from 85 to 45 degrees might change the pattern a little bit." And it did for me, for sure. But then it didn't help when I was talking to other buddies that were out in the same lake the same day, and they hammered them.
Yeah.
So it's fishing, but. Ryan got there, and of course the bite died perfectly for Ryan.
Got a beauty though.
Yeah, yep, caught some, and but I'm gonna go do some more of that. I can't believe I swung into the office to even work today.
I mean, if we're gonna go down the fishing route just for a minute, I'm not gonna complain. Last Saturday I was catching trout, or 2 Saturdays ago, and last Saturday I was catching walleyes.
Yeah.
Not bad for spring in Minnesota.
No, especially when no one else is fishing. We're a little like you have to go to a border water. The Minnesota season's actually closed right
fishing
now.
Trout.
Yeah, crappies are open and sunfish, trout, southern Minnesota. So it's like this isn't exactly open. So you got to be a true pioneer to get out there early like this. You got to really want to be out there. Weather's okay, but I did, like you said, we happen to be driving to where we're going. Fishing, and it's all farm country, the whole thing. I'm talking, what would you say? Some of those fields are 2,000 acres, just square 2,000 acre fields or more, maybe 3.
I mean,
I'm talking no
it's
stops.
Definitely a full section with not even a tree in it.
No stops, no hills, nothing, just straight tractor planting, on thousands of acres without stopping. There's a lot of that on the way there, and tractors were rolling. So if they're rolling West Central,
that's my favorite part is that you see that little tiny tractor out there.
Yep.
And you realize that thing is like 8 times my truck, but it looks like this little tiny tractor across that section.
Yeah, we're in a unique area. I mean, you go a little bit north, and all of a sudden it gets to be hilly and sandy, and it gets towards lakes and a little more alkaline, and it's not near the dirt that we're talking about as you drive towards South Dakota, North Dakota border, and a little south here. It's that that deep black. I'll take a picture of it actually today on the way there. I got to go back, and it's that deep black. There's drain. It's really wet. It's the old lake bed is what it is. It's that premier, like almost Iowa type dirt, and just these large farms with 0 towns around, just nothing but farming.
Not even a gas station.
There's not even a gas station. It's just nothing but gigantic amounts of farmland. That's very good. Although it gets wet early, they just all those pipes running out of those fields draining every day. Pretty impressive to see too. They really got that dialed in. But if we're rolling here, we're rolling everywhere. That's what the numbers just came out this afternoon said. And I just don't know how they build a bull case on that deal. It seems like it's going to be tough.
Speaking of rolling.
Yes.
I got to get going.
Yep. It is time to go, and it's time to go fishing.
Perfect. Leave your number, John.
218-731-1578.
Thanks.